Costco, where everyone gets a bargain. Yeah, right, Costco absolutely is definitely not the cheapest place to go, but it's all about convenience and bulk buying. Yes, absolutely, people can bulk buy to their heart's content, and the stock price continues to grow into the oblivion. But is it worth it? Is it an absolute overvalued stock, or is it going to continue to grow and grow into the stock price right here, right now? You'll find that out here at Barry Charles as we do a stock analysis on Costco. And if you stay right to the end, I will give you the possible intrinsic value of Costco and where possibly you can look at buying in. Welcome to Barry Charles, your one-stop shop for everything finance. Let's get to it. Costco is here to save the day when you need to feed a whole tribe. Let's get to it. Yes, Costco. We're going to look at the stock analysis of Costco, and we're going to start off with the revenue. Yes, well, going in, the revenue for 2022 was 226 billion. It's expected to be well over that in 2023. But yeah, so this is going to be an interesting future of revenue. It has been going well for Costco, but we're going to see a bit of a decline now, depending on how the environment going. At the moment, you're looking at the environment, everything's sweet and dandy, but if it goes downhill, you may get the chance to buy in at a much better rate with Costco. The net profit in 2022 was about 5.8 billion, expected to be over 6 billion in 2023, but it's and which from a few years ago in 2019 was 3.7 billion, so nice. So that's a double the net profit in the net profit over the last 4 years. So that's very positive for the company. So that's something very positive. But if you look at this 2.26 billion compared to 5.8 billion at the bottom line, there's not much margin in this business, a bit like Amazon and the like. So even though it's doing well, they're not getting a lot at the bottom line of the business. Earnings per share is very healthy at 14.5. The PE ratio is at 38. Is this company growing that quick? It deserves a 38? I don't think so. It's a very strong company, don't get me wrong. Very good moat and everything, but to me, it's at where it is now, it probably needs to be like 15 for it to be value for me personally. At the moment, it's just way too expensive. Dividend rate's nothing to scream about, only 0.7%, so it's nothing to really talk about here. You get $4.80 a share a year. Nothing much for a stock that is so high. Assets, yes, the assets of Costco is 66 billion from 45 billion in 2019. So the assets are going up. That's what you like to see. That's a positive for this company. If we look on the other side though, the liabilities, so the assets versus the liabilities has increased to 43 billion from 29 billion in 2019. So similar growth rates in both of them, so not much difference. But again, liabilities, if you can get your liabilities down, that's where your business starts to really rocking and shaking. But it's not bad. I've seen worse ones, but it's still something they could improve on going down the line. Free cash flow for a company that makes 226 billion, their free cash flow is pretty much the same as the net profit of 45.8 billion. So down from 6.9 billion in 2021. So it's a bit of a trend for a bit of a yo-yo effect at the moment. If you can double that and get a more sweeter money going through, that'd be a positive for the business. Long-term debt is 6.49 billion. So this is a promising thing for people. It's down from 7.5 billion in 2021. So in 2 years, they've cut it by $1 billion. So that is a very positive thing. They can continue to do that. But again, if you look at the free cash flow compared to long-term debt, the long-term debt is still higher. But still, it's not too bad in terms of long-term debt compared to some other companies that I've been talking about. So Costco's going okay in terms of that. But again, do you want to pay most of it off? Get that off your... That's a lot of things that I think of at the moment. If your company's not really going anywhere, it's the time to just get rid of the debt at least while the interest rates are so high, and then if you need to pull out debt again, you wait for it to come back lower, but just get it off your books. This is the way I'd be looking at it anyway. But as they could use it in other ways that can make them more money, so it's a bit of a catch-22 when it comes to free cash flow, because they can use it to acquire businesses or use for the business. So that's the question mark around there. So shares outstanding of 443 million. Well, this is a stock that's an interesting one. It's slightly diluting you lately. Nothing extreme or staying flat, but it's definitely a stock you need to think about before you invest into going forward. In terms of that, they're not really giving you much back to the shareholders, so there's a little bit of a danger if you're going into Costco. So what does Costco need to do? To be honest, they've been doing great. Honestly, this in terms of the company, they're going well. Obviously, you could try and get their net profit up from the revenue, but it's probably going to be hard in this sort of business. But if they could push their net profit up a lot more, then definitely would be looking, because what is it, about 5%? Not even that. Very low. It's not even 5%. It's like 2.5%, something ridiculous. Yeah, if they could get that up to 5% for a start, then it'll be a little bit more compelling. But really, it's all about share price at the end of the day. One thing you could say about Costco: has it always been traded rich, or has it just been recently? That's a question for you to decide at home. But we are going to look at the intrinsic value right here, right now for Costco. So, yeah, well, sorry, with the terms of what growth Costco can do for the business, obviously cutting down their net profit, the revenue's been going fine. Pay down some of the debt. They could do some share buybacks, would be something they could be doing to just improve their balance sheets and all that sort of stuff. And obviously just getting more and more stores. They can continue to build more stores and build net income. That's where I'd be looking at. But really, they got a very good business model, very simple, and they do well, but very low margin business. Let's have a look at it. The Graham calculator for intrinsic value. So it looks at the share price, the earnings per share, growth rates, the current bond yield. So the bond yield, you can put whatever you want on this, but I just do roughly around the current bond yield. And the intrinsic value is calculated between that. So we're going to just say, for this instance, the stocks go up and down like a yo-yo, but we're going to say 550 a share. It's the price of Costco at 14.5%, and the earnings per share at a growth rate of 5%. We get an intrinsic value of $270. Now, is that the true intrinsic value of this company? Well, if we look at 10% growth rate with exactly the same figures, now you're jumping up to 430, but still nowhere near the stock price. And even if you doubled the earnings per share, then you're starting to go, yes, this is a company worth looking at $861 intrinsic value. So what do I believe the intrinsic value of Costco is? Well, when I look at the metrics here, I'm going to say just under the 10% growth rate at the current figures roughly. So I'm going to say around the 400 marks in intrinsic value. So do you want to pay 550? Do you want to pay 500, 600? To me, it's a hell no. When I look at investing into stocks, for instance, on most of these cases, if you can get it, I like to try to get 100% gain. 50% gain's good as well. But to me, if I'm looking where it is now, I need to drop to 200. Is the likelihood that it can drop to 200? People probably say no, but we've seen it all before. If we see a recession, then maybe you'll get that opportunity to get Costco at a good price. But as you know, when you get it at a good price, often the revenues and that will drop, and then you might see a slower recovery. But eventually, you'd see it grow back up. If the company is solid and continues to do the right thing, then you'll see it sailing back up again. So, for me personally, I would not be buying the stock. It's way too overpriced, in my opinion. Maybe this is a stock that is always going to be overpriced from here on in. Not sure. I'm sure if we see a recession, then you'll see the price really drop. And that might be a good time to get in. But don't stop me from letting you invest in Costco if you think it's going to continue to just go smooth sailing from here. It could be still at a good price. But that's not financial advice. Do your own research before you invest into any stock. Do it at your own risk. Well, thank you very much for joining me here at Barry Charles, and hope you got a bit of insight into the key metrics of Costco and what possible intrinsic value is. If you enjoyed the video, share with your friends and like and subscribe to the channel. Have a great day out there, my friends.